Hi, I'm James Garvey, co-founder and CEO of SelfLender. SelfLender is the new revolutionary way to build credit, save money, and gain access to affordable financial products. As Americans, we all have a number attached to our name, our credit score. This number impacts what we can do, where we can live, in some cases, where we can work. Our credit score is calculated based on 5 components, with the most important being on-time, positive payment history. For many, building payment history is as easy as using your credit card to buy stuff, paying it off, and then repeating. Yet for millions of Americans are denied this basic opportunity because in order to build or establish credit, first, you need credit. It's a fundamental catch-22. As a result, 1 in 4 Americans do not have a credit score, and 100 million Americans have subprime credit with scores below 650. The problem is, building credit is hard. Not having credit is expensive and very limiting. Take, for example, Dolores, who was recently featured in the New York Times. Dolores needed to buy a $4,600 car, but because she did not have a credit score, Dolores had to pay an absurd 23% interest rate and take out a life insurance policy to guarantee repayment. In total, she paid nearly $14,000 for a $4,600 car, 3 times its value. This is a huge problem. The solution is SelfLender. Let's see what would happen if Dolores used SelfLender to build credit, save money, and gain access to an affordable auto loan. We switch to the demo. This is SelfLender.com. SelfLender enables our users to build positive payment history, the most important factor in determining your credit score. Credit unions have been using this model in a small, localized capacity for years. Signing up with SelfLender is easy, takes less than 3 minutes, and only costs $3 per month. So let's have Dolores sign up by using her information. Next, she selects how much payment history she wants to build by choosing a monthly amount between $25 to $250 and selecting a term between 3, 6, 9, or 12 months. The larger the amount, the longer the term, the greater the impact on her credit score. So Dolores chooses a 6-month term at $100 per month. SelfLender reports her monthly payment performance to the credit bureaus. From here, Dolores will have 6 payments of $100 per month. After making her 6 payments, she will receive her entire $600 back at the end of the term. Next, she chooses her payment method, agrees to the contract, and now this is what her account looks like after she registers. At this point, she does not have payment history, nor does she have a credit score. So let's fast forward 6 months. At this point, she has completed her term, she has built positive payment history, and she now has a credit score of 660. SelfLender uses her payment data internally to offer her exclusive lending opportunities. So let's see how Dolores can use her new credit score to save money. Clicking on the Rewards tab, we see that Dolores is offered multiple financial products, including an auto loan at 11% instead of the subprime rate she was offered at 23%. Next, and the best part, with 1 click, Dolores can apply her SelfLender balance as a down payment for a car and receive an instant text message approval shortly. From here, Dolores will be able to save over $8,000. This is life-changing. Let's go back to the presentation, please. Moving from no credit score to having a prime credit score has a significant impact on a person's financial life. Studies show that a person who transitions into prime credit has an average lifetime savings of $250,000 in fees and interest. Imagine if SelfLender could help just 1% of the 100 million Americans in the subprime market. For these 1 million people, SelfLender could save them up to $250 billion in their lifetime. SelfLender empowers our users with the tools for active, do-it-yourself financial improvement. And by helping people who currently do not have loyalty to mainstream financial institutions, SelfLender has the opportunity to build profitable, long-term relationships with millions of Americans and become the platform of choice for building credit, saving money, and getting access to affordable financial products. Thank you very much.
All right. SelfLender. Judges.
So isn't one challenge that the folks who are sort of underbanked are also not necessarily ones who are most early adopters of online technology? How do you plan to acquire your customers?
So I have a background in acquiring users in high volume through direct marketing, CPA, offers on Facebook, Google AdWords. One of the things we're doing as well is we're partnering with a company that has ability to accept cash payments so that they can come through SelfLender and actually pay at over 17,000 locations in 7-Eleven. So it makes an opportunity for us to capture people who don't have a bank account.
And just to add on to that, this is truly a real pain these people are feeling. Like when they're going to a buy here, pay here auto lot and being told they're having to pay outrageous interest rates, getting themselves in a situation that they can't afford to make these payments. I mean, this is a real pain, and real pains lead to needs for real solutions, even in situations where they wouldn't normally be an early adopter for technology.
Have you done market research with your target customers, and what is their response to this product that you're offering?
So we have a few beta customers so far, and the response has been phenomenal.
How did you find these people?
We've been using only the marketing channels of Facebook, Google, Twitter.
And what are their backgrounds?
My background is in...
Like the customer's background.
So our users' backgrounds really run a wide range of spectrums, of course, because everyone has a credit score. I think you find a couple of key metrics in that they can be young and they have a limited credit history. Individuals who don't traditionally work in banking, they're underbanked or only using debit cards, and individuals who were crushed during the Great Recession, now they're in a situation where foreclosure, bankruptcy is preventing them, and they're looking for new solutions to help them restore their credit history and get access to these products.
And so how far in advance will they be willing to plan ahead? So as you've kind of experimented with this and you had sort of the 3 months to a year, if I'm thinking I need a car and even if it is $4,000, like you're still basically saying now wait 3, 6, 9 months before you can actually prove that you can go get the car at a better rate. So can you kind of walk through that sort of patience and sort of need and urgency?
Yeah, I mean, it's definitely, it's not an instant solution. It requires a little bit of planning, but there are 70 to 90 million people who have subprime credit just because there's no data on them. And if we educate them through the right channels, I think we can acquire them and they can be patient because they have no alternatives. They can't build credit.
What we found is that these individuals are highly incentivized to find new solutions. And so the idea of being able to save up money through the service, to an instance that we showed, to apply it as a down payment, those things, since they are highly incentivized, leads to them being willing to accept a delayed gratification on a product, which is unique.
I think you showed a slide where basically you said 35% of, paying on time, having a credit history, makes about 35% of your credit score. What is with the other, with the rest, with the 65%? How can, are 35% enough to influence my entire credit score?
So SelfLender builds every single piece of that pie. But the key thing is most people need more payment history. And if you want to answer any more on that.
Yeah, that's really just the way to start. And also just to say that payment history is the largest component of your credit score. And so to be able to identify that and makes it very easy to understand our product as well, as opposed to a very complicated graph of all these elements, and we're impacting all these elements. In reality, yes, we're impacting every attribute that goes into determining your credit score in a modeling situation, but we wanted to stick, at least for the pursuit of this demo, to one single element.
What happens if it turns out that you're creating false positives? So you're sort of leading people through a very managed process to try to increase their credit score. But once they get the, qualify for prime loans, so on and so forth, how do you ensure that they're actually going to fulfill their obligations?
So one point to make is that this is not a new type of payment obligation that we're creating. Like, we're not saying this data is predictive. FICO and Vantage have already proved through their own scoring models that what we're doing is predictive. Credit unions offer this. It's a credit builder loan. It's a very common product. So this data is not false positive because it's been shown throughout decades of use in credit scoring models to be predictive of repayment behavior.
So then why are you better than credit unions?
Because we're offering a seamless online approach as opposed to having to go and wait in line at a bank or a credit union. 70 million Americans are underbanked. To them, they're not going to go stand in line at that credit union, but if we can have them sign up in 3 minutes on their mobile phone, set up auto pay and forget about it, it's a very compelling proposition to them.
Would you consider distributing through credit unions then?
Absolutely.
So I'm a little bit sensitive to, as you're charting on Facebook, I mean, there is a lot of sort of predatory loans and other loan programs that are out there. How do you sort of build that trust to say, hey, start paying us? And that's the real challenge of kind of building a new brand and doing that.
Yeah, absolutely. And we're trying to partner with some big banks, and we are in the middle of that process. And so we hope we'll have some big announcement next month. So add more trust
and
to
also around
consumers.
Transparency with our terms. 0% interest, 0 fees. Our only late fee is $5 after 30 days. So the transparency is a very unique thing about our product.
So because my only other question was, you said if I put in $600, I get $600 back.
Absolutely.
Isn't there a little bit of float that could have happened in that meantime? Do you not give that back to the payer? Like if it just accrued a little bit of interest on that money.
It's very, very small,
Okay.
and to the point where it's such a small number.
And almost complicates the value proposition to
Exactly.
the user as well.
Okay.
Like
Got it.
0.5%.
All right. So unfortunately, we're out of time. You guys did a great job, though. That was SelfLender.